Thanks, Joel. So excited to be here today at Greenfin to have this incredible panel to talk about the SDGs and sustainable finance and the opportunity for CFOs to have a huge difference in our world. Really excited to have Fernando and Alberto here. I'm Emily Chasan. I'm Director of Communications at Generate Capital. We work every day on building sustainable infrastructure and trying to put steel in the ground that helps us reach these clean energy goals. Well, let's start talking a little bit about the role of the CFO. I spent a lot of my life covering CFOs and accounting, got really interested in sustainable finance because of all these intangible assets that CFOs were starting to worry about. But I'm curious, what's the business case for you on the SDGs? Let's start with Fernando.
Oh, thanks, Emily. Good morning, good afternoon. For me, I would put the question in a different way. What is the business case for any business? When we look at beer, we depend on health, natural ingredients, and we depend on local thriving communities. So ESG has been a huge focus for us for the last 20, 30 years. It's not something new, and you don't need a business case for that, because without these natural ingredients, without thriving local communities, we don't have our beer business. So it's very easy for us to be a champion of ESG, given that all our operations rely on that. I normally say it's a false dilemma. There is always this view that there is a trade-off between ESG and business. In our case, it's quite the opposite. We say that ESG is our business. So we have always been behind it and will continue to be. And ESG financing is just another layer on top of that, but the business case has always been there.
That's great. Thanks for that intro. Let's talk to Enel and hear your view on it. It's so amazing to be a CFO and have this opportunity to actually spend the money to reach the SDGs. What's the business case for you?
Well, thank you, Emily. Good afternoon to you all. Well, so I would say there is a date in 2015 in which the company will decide to change completely the way and the strategy, and moving from some sustainable activity into a core strategy of sustainability. So we decided that year to change completely everything, focusing our strategy and our business model within sustainability. We choose 4 SDGs out of the 17, because the 4 SDGs, there is the 7, the 9, the 11, and the 13, only so related to our activity, are so the base of our action. And we decided to change completely the way we look at our work. Now we focus on 3 main words. One is decarbonization of production. That means renewables substituting fossil fuels. It means digitization of infrastructure, because only with digital infrastructure we can change completely and we can do the energy transition. And third, electrification of consumption. The only way to save the world is to change the energy consumption into electrical consumption. All these 3 things together is moving towards so the climate action we need. But together with this, we have a very, very good and relevant increase in our markets that we can address on one side. And it's the only way to offer to our customers important improving in terms of technology and in terms of also our savings. This is for us the business case.
Thanks for that, Alberto. Scott, I'd love to go to you. And at PIMCO, as an investor, you have to be deploying capital every day. And it's such a world, as just Alberto was describing, where there's so many changing transitions. What's the business case for you in activating capital for sustainable finance?
Yeah, well, from our perspective, sustainability is at the highest level, and it's always worth remembering this. It's about making growth bigger than it would have been otherwise. It's about making it more inclusive and more resilient. And so it's good for business and it's good for investors. And that's why, we've been very supportive of trying to advance the SDGs, especially as the global language of sustainability, and also the financial innovation that can come from that in terms of issuers being able to, one, as been mentioned, really integrate sustainability into their value proposition for all their stakeholders, right? So increasingly that matters. It matters for employees, it matters for customers, it certainly matters for investors more and more, I would say, for all of those stakeholders. So, but looking for a way to do that and also innovate in the financial marketplace. That's important to us too, because so many of our investors want to align their portfolios in a more sustainable way. And this presents an easier way, an easier approach for them to do that.
Yeah, what's so interesting about what you're all talking about is the financial opportunity behind sustainability and the ability to innovate finance so that it helps promote sustainability instead of hinder it. And I think what you've both done at Enel and AB InBev has been really interesting in terms of being sort of pioneers in the sustainability linked loan space, which I think is one of the first spaces in ESG that really, puts the feet to the fire and says, we're going to hold you accountable for reaching your ESG goals. Fernando, what made you want to do a sustainability linked loan, and especially at the size that you did? Can you tell me a little bit about that story?
Sure, Emily. We, as I said, we've been working on sustainability for quite a long time. But in fairness, the market is still, at least in terms of regulations, standards, is still evolving a lot. There is no consensus. And even though we looked in the past for other green bonds, sustainability linked loans, we never felt comfortable that the market was mature enough for us to be able to reflect where we are in these instruments. And I can tell that over the last couple of years, it's changed a lot. There is a lot of evolution. There is a much better understanding, not only from the companies, from the markets, but from the investors as well. And then we felt comfortable to reflect what we've been doing in the company for the last 20, 30 years in a financial instrument. And these achieve two different objectives. One is kind of, that is, as you said, fostering a new type of instrument, the benefits, the company can get benefits from that. Sustainability is part of our business, so it's good to benefit. But the second, and maybe even more important ones, given our size and scale, we felt that we need to take a stance. We need to be at the forefront of this discussion. And then we were able to do a very large sustainability linked loan, which is fully aligned with our objectives, but also is a great tool to make a statement out there.
Thank you for that. It sounds like you helped develop the market, and that was important to you as well. Alberto, at Enel, what did you see? What made you want to be in the sustainability linked loan market?
Well, when we were at the table to try to invent this new instrument, we were discussing among us, because at the very beginning, the only green bonds were present on the market. We found, and we were a big issuer of green bonds. At the time in which we decided to change from sustainability linked to projects that are not so the core focus of your company, to move in a full business related to sustainability, we didn't find any kind of instrument in the market. So we decided to invent one that is a sustainability linked bond. And why it's so different, and why we think it will be the instrument that will open the sustainable finance to the market and will drive the transition. Because it is linked to your strategy. You can issue any sustainability linked bond without having a full strategy into sustainability, while the green bonds allow you to issue instruments only if you do some projects, but you don't have your strategy in the sustainability. So the second is, I think, relevant is that everything we do in sustainability has to be a business. So if you issue sustainability green bond, we have to get a discount from the market. We don't have to pay more than a normal bond, because it is not the way to impulse the sustainable finance, the sustainability and transition. Everything that has to have an economical sense. And green bond didn't have it, because at the end, a green bond costs more than a normal bond. What we got, and also Fernando, is a credible discount from the market. Why that? because sustainable companies, real sustainable companies, are more profitable and less risky than normal companies. And this is a clear financial perspective. In this case, you can get a discount because you are offering the market these parameters that are relevant to price in a financial instrument. At the very beginning, we were alone. For 1 year, we waited for others. Now the market is opening in a very, very incredible way. So today is expected that sustainable linked financing will go on 150 billion euros is the expectation. And also the sustainable linked loan now are booming and are becoming one of the most important instruments. This is driving the change.
That's so important what you pointed to, Alberto, that it was really important for you to get the incentives correct in that bond. Where the green bonds, there is a cost to sort of monitoring your performance and maybe setting that up in the beginning, but you wanted to make sure that the sustainability bond was as effective or more effective for your incentive alignment to show your performance as a sustainable company. What's happened since you issued that bond?
Well, so what happened? So at the very beginning it was difficult to define with the market how these bonds would work. It's because at the beginning, so we had a discount at the very beginning, and we have a step up if we miss the target. This is more or less how this instrument works. The philosophical problem was why? So I am a fund, so I have to hope what? That you miss the target, I'm getting a higher price, or you do the target because I am a sustainable fund. Well, it's not the real philosophical problem, because the problem is not to put in that way. The only way to discuss it is, if I miss the target, I'm offering you a company that is less profitable and more risky. Because only if I follow the sustainable path, my company will be in the future so as profitable and risky, I'm promising you. That's why I'm paying more if I miss the target, not because I have mistrust my sustainable target. If we don't find the real way to link sustainability and economy, we will never drive the transition.
Yeah, Fernando, I wanted to go back to you and also ask how you linked the bond to your performance and how you're seeing that play out now that you have it there.
Oh, it's very similar. It's a very similar discussion at the end of the day. Sustainable companies, they are less risky than companies which are not sustainable. We always say that we have more than 600 years of history and we want to be here for the next 600. And without sustainability, that won't happen. So whenever we talk to investors, to banks, they also understand that. That's why you get a benefit. It's at the end of the day, it's based on sustainability indicators. But as Alberto said, it's a purely economical benefit. You are a less risk company. You are more likely to deliver on your objectives, and you are being rewarded for that. And if you don't deliver on that, it's not that it's a shame that you didn't deliver on your goals. You are actually a company for more risk, a riskier company, and then you should be paying the price for that. So that's the beauty of this sustainability linker loans, because there is a very strong linkage between the economic view and the sustainability view.
Great. Well, I wanted to step back a little into like the sort of the 3,000-foot view of how we can incentivize this throughout the financial markets. And Scott, you're the perfect person to ask about that. How do you see policy playing a role in sort of incentivizing this one? We've seen sustainability loans already take off, probably going to be 120 million this year, at least, of issuance. What do you see happening there throughout the market?
Yeah, I think that's fortunately the innovators, AB InBev and Enel really opened up and I think turbocharged a movement in the marketplace that is in our view going to continue to expand. I mean, imagine sustainability in general, sustainability linked bonds and loans being multiple trillions of dollars, much bigger than the green bond market. And ultimately, we could see green bonds being even a subset, of this whole asset class. That's how we think the market will develop. And of course, the more size that comes, the more interest there is from investors, the more portfolios are devoted to it, the more there's indices developed, the disclosures get better from companies that are issuing into the space. So, all of that's is a powerful ecosystem that is really moving quickly now. And I think you'll see year-on-year issuance continue to really accelerate. But the other thing that's happening, of course, is big changes on the standardization and disclosures, which everybody, of course, on the investor side has been asking for a long period of time, and it's happening, right? So you see it happening in Europe. We're quite convinced it's going to happen in the U.S. as well, and we see a lot of discussions ongoing with all sorts of regulatory bodies in the U.S. And that is going to be exciting because it's hard to have the U.S. missing from that picture, but if the U.S. can coordinate with Europe and Asian investors and develop some standards for investors, then it's just going to be that much better for the issuer, much better for our investors. That's kind of how we think it'll also continue to evolve.
Yeah, just a lightning round to sort of close us out. I'd love Fernando and Alberto to talk a little bit about what you just mentioned, Scott, about standardization. We see the IFRS Foundation coming into this space. We see the SEC talking more about standardizing ESG disclosures. With your disclosure hat, how will that change things if there were more consistent, comparable disclosures in the market?
Emily, that would be a very welcome improvement. As Scott said, I feel that we are in a better place today, but there is still a long way to go. IFRS is one example. The other one is rating agencies. For example, whenever you look at the credit metrics, even though the rating agents out there, they have different metrics, but whenever you improve your overall company metrics, you tend to see that reflect on the credit ratings. When you look at ESG ratings, it's kind of a much more dispersed. There is not too much of a standardization. So both from this angle, as well IFRS, accounting standards, the more standardization, the more welcome, and the more to kind of be a boost for the ESG issuance, sustainable linked loans issuance, because the rules, they're going to be very clear and understood both by issuers as well as investors.
Awesome. Alberto, I know you're on the CFO task force with the UN Global Compact. How do you see CFOs generally responding to this potential for more standardized ESG disclosure and SDG disclosure?
Well, I'm fully in line with Fernando. I think that so harmonization and standardization is key because it's a new field, and like every new field, at the very beginning, you have a very different way to judge what is the change. But at the end, if you have too many, this is a little bit of confusion. So in the second step of this development, you need an harmonization of everything. We have been reporting our sustainability performance for several years according to the most important innovative standards like GRI. But so we welcome an initiative that from any part would come. So IFRS Foundation, second. So there are many tables that are working on it. The only thing, the only thing I think, and so as a CFO task force, we think that is desirable, is that there is a worldwide consistency in the application of these metrics. So now we have to move over so the dispersion of different way to judge things and to have only one. And this is the task we have in the CFO task force. So we don't want to invent nothing. We want to only to have things that may have a worldwide consistency in so applying to a very wide range of companies and CFOs. This in terms of so the storytelling and the way to adopt SDGs on the sustainable finance, and so the instruments we talk about, and also the way we report our progress and the sustainability of our business. Also, in this case, we hope to have an harmonization that we can adopt all together and so make it at a standard worldwide of what we are doing.
I think that's a great reminder that this is such a worldwide problem and a good place for us to wrap up our conversation. But thank you, Fernando, Alberto, and Scott, for your really incredible insights on how we can align the markets for the SDGs going forward.